Hey, welcome to RWC Investments. My name is Christopher C. Day, and I am the managing partner here with RWC Investments. We provide investment opportunities for regular people. Today, we are going to talk about how to build a multi-million dollar portfolio using business acquisitions and fixed rate notes. First of all, you need a criteria for business acquisition. For us, we only purchase businesses that are have a gross annual revenue of between $1 and $5 million a year, and an SDE, which is a seller's discretionary earning of $250,000 to $500,000 per year. That is the pass-through income that goes right back to the owners, which would be our company. So we want to make sure that when we get into a company, that it definitely has this much revenue, definitely has this type of pass-through income to us from day one, right? Also, it must be profitable within the last 3 years. Last three consecutive years must be profitable on their tax returns, not in their books, but on the tax returns. Um, we need the company to be in business anywhere between 7 and 10 years minimum before we even look at it. That shows longevity of life or longevity of the company, and it's still got some legs ahead of it with a little bit of growth potential. So uh, that's really how we look at our business acquisition criteria. Now, going on from there, how do you acquire those businesses, and how would you do something like that starting with no money at all? Well, let's talk about the possibility of fixed rate notes and what are they? Well, what is a note? Period. Well, a note is a promissory note. Okay, it is a legal contract, an obligation, or a between two individuals, two parties, between a company and an individual, that expresses an amount of value that will be paid or repaid back to the investor with a certain amount of interest at a certain interval within a certain time schedule. That's it. It's basically souped up loan documentation. It's the same thing that you fill out when you buy a car, same thing when you do your mortgage. It's a promissory note. It is uh, a legal binding contract stating that you will be paying a person at a certain schedule, on a certain payment schedule with at a certain time period with a certain amounts that are all specified within that contract. That's what a note or a promissory note is. Now, what is a fixed rate note? A fixed rate note is basically a contract that you can offer investors that guarantee them a certain rate of return on their investment. The majority of investments made are, hey, give us your money, and if the company that we're building or buying or what have you does anything, then you'll make a percentage of the profits. Right. However, a lot of investors like a safer opportunity. They like a safer option. And what do I mean by safer? Well, when I mean safer, it's that it's not contingent on market volatility. The whole idea is that it's a legal binding contract. That they give you X amount of dollars and they receive X amount of dollars on a certain schedule, right? At a certain interest rate. That's it. All of the other stuff is irrelevant. That's neither here nor there. It's we have a legal contract to fulfill an obligation, a financial obligation between two parties. In a nutshell, that's what they're buying. And they would now. Don't get me wrong. When you're doing business acquisition, the rate of gain can be exponential, and we'll talk about that momentarily. And that's one of the most attractive features of business acquisitions and mergers, sales, exiting those positions, because of the way that they're sold. They're generally sold on a multiplier of revenue, not the revenue itself. Um, so you get more than what you ever had to put in. You get more than what you were actually making in any given time period at one lump sum, and that's very attractive. So how do we actually go about doing that? Well, let's talk about the fixed rate notes. Let's come over here to the whiteboard and look at that. And let's say we offer a $10,000 note, which we do. We actually offer them in 5,000, 10,000, 25,000, 50,000, and $100,000 increments, all at different percentage levels, excuse me, APYs, which is an annual percentage yield. So depending on how much money you put in, determines the yield that you'll get back on that money. Let's start off real simple, and let's talk about $10,000. Right, on a $10,000 fixed note. Okay, let's just say we were able to sell 100 of them for $10,000. Okay, that equals $1 million. Now we're sitting with $1 million. Now we're talking about how would we take this $1 million and grow it into a multi-million-dollar portfolio. That's actually pretty simple. We want to buy companies that we could actually get into for that. So what would that price be? What would that price look like? Well, we know that we can get into a $250,000 SDE business, right, at a 2x multiplier, and that's 500K. All right, that means for $500,000, you could get into, you could get into this business that actually generates you $250,000, right? So that's pretty awesome. Now, do you have 500,000? Well, you sure do. You could go buy two of them at that price. However, the smart thing to do would be go through financing. You're going to deal with the SBA. You're going to do a little seller financing, creative financing, and whatnot. There's multiple financing options that allow you to distribute this over time instead of having to be at one time. Now, generally, if you've got a business that cash flows like this, you could do an SBA loan for up to 90% of that, of that business. So let's take a look at that. Let's take a look at that at $50,000, right? $50,000 would be 10%, right? Equals 10% of a 500K business, right? So you should be able to do that at a down payment of $50K. So for $50,000, you can get into a business that yields you $250,000 a year, okay, but is valued at $500,000, right, on $50K. So remember, we have 1 million that we're working with. Now, if we've got 1 million that we're working with, how many of those businesses at $250,000 a year could we possibly, purchase with that money? The answer is 20 businesses. Okay, at 500,000. Okay, remember that's the valuation. All right, that equals $10 million portfolio valuation. That, in a nutshell, is how you go from $0 to owning a multi-million-dollar business acquisition portfolio. If you'd like to know more about business acquisition and how it can change your life, if you would like to know more about how to make some of these things happen, not just told about how awesome they are, but want to know how you can do that as well, be sure and click the link down below. I put out information on this all the time. Follow the channel, share the channel, tell your friends about it. We do have an exclusive Discord channel that is it is a premium membership. However, message me and we'll see if we can't get you a free pass. Only if you watch the video this far will you know about that tidbit of gold. All right, thanks for watching, guys. I hope you got some great knowledge out of this video. Have a fantastic day.